Welcome to Richard Suttmeyer's 4 and 4. 4 blips on my radar screen presented in 4 minutes or less. My first blip is discussing the consumer. Consumer sentiment for October is released on Tuesday and should continue to slide. I don't understand why many economists say that the consumer is alive and well. We have heard warnings from retailers of all types, and the retail holders, symbol RTH, is down 0.4% year to date. The weekly chart profile shows the 200-week simple moving average at 96.4 as important support. The poster child for luxury retailing, Coach, COH, is down 31% since reacting positively to the FOMC rate cut in September. To illustrate extremes, NutriSystem, NTRI, is down more than 50% since the September rate cut, with McDonald's, MCD, up 15% to a new all-time high of 58.56 set last Friday. I guess consumers have canceled their weight loss programs in favor of Big Macs. My second blip is the Federal Reserve policy. The FOMC is expected to cut the Fed funds rate by 25 basis points to 4.5% at 2:15 p.m. on Wednesday. I don't see how the Federal Reserve can justify a rate cut with gold breaking out, crude oil at an all-time high, and the dollar at a new low versus the euro. The weekly chart for gold shows upside to my quarterly resistance at 813.1. This is a sign that the world is looking for a currency of last resort. Gold is approaching $800 the ounce this morning, with crude oil above $93 per barrel and the euro at yet another all-time high. In addition, how can the FOMC justify rate cuts with Q2 GDP at 3.8% and with the advanced reading for Q3 GDP likely to be reported at 3% several hours before ending the FOMC meeting? My third blip is discussing the labor market. Initial jobless claims could approach 350,000 this week. A trend above 350 has correlated to recession in past cycles. Non-farm payrolls for October will be released on Friday, and jobs are expected to grow 80,000 with the unemployment rate stable at 4.7%. Economic data after the FOMC cuts the federal funds rate to 4.5% could show some softness in personal income and spending, and the ISM index should be just above 50. My fourth blip is reviewing the key levels for the major equity averages this week. Since the Ides of October, the Dow is down 286 points. 570 points down 2 weeks ago, and 285 points up last week. A positive reaction to the FOMC could see the Dow reach semi-annual and quarterly and weekly resistances at 13,925, 14,025, and 14,101. The S&P can reach quarterly and weekly resistances at 1559 and 1566.2. The NASDAQ held quarterly support at 2697 last Monday. Weekly semi-annual resistance are 2839 and 2884. That's today's 4 and 4. Join me tomorrow for Tech Tuesday and send any comments or questions to support@rightsideadvisors.com.